Riding a bullish trend, both the Sensex and the Nifty rallying in the first half of the year. Small and mid caps have remained in favour with strong demand from retail investors. So let's discuss third quarter investment strategy with Shweta Rajani, Senior Vice President and Mutual Funds Head at Anand Rathi Private Wealth Management. Shweta, thanks so much for joining us today. So yeah, great first half for Indian equities. As we head into the second half, what's the outlook for you? Is this still a buy the dips market?
Hello, good morning. Yes, I would say this is a market where it's fairly priced, especially, the large and small cap segment, mid cap also in pockets. So definitely a market to buy. The upside that we've seen in the first half, we can very much expect that to continue even in, the forthcoming quarters as well. So fundamentals in place and therefore definitely a buy, I would say.
So we've got foreign inflows likely to rise in the next 10 months as well, because of course on Friday, Indian bonds were included in the JP Morgan Emerging Market Bond Index. That might prop up the rupee near historic lows as well. Do you think the RBI might be looking at easing in its next couple of meetings?
Yes. So, definitely you mentioned the inclusion in the JP Morgan bond index. We're expecting $30 billion to come in because of that inclusion. We've already seen, once the news is out, there have been around $12 billion coming into the market. And that's going to have cascading effects, not just on pushing down the bond yields, but also giving a favorable equity market valuation, giving some comfort to the rupee. So that's definitely a positive and will have, multi-effect on various asset classes. So yes, it could mean, RBI looking at rate cuts, but whenever that happens, bond yields definitely getting pushed down and equity markets rising to that effect because of fund flows coming in.
We're seeing some pretty good traction with large cap stocks. Is that where you see the money rotating now, or is this smaller investor passion for small and mid cap stocks likely to continue?
So actually, if you look at this, there's actually money flowing in all the three segments of large, mid, small. But in terms of proportion, there's more money heading towards large cap. That's given because, if I'm looking at the three market capitalizations, large cap is slightly favorably valued compared to the other two. But, if I just look at the monthly money that comes in the form of SIPs, which is around 21,000 rupees per month, 40% of it approximately gets into large, and an equal 30-30 is getting into the mid and the small cap space. So, directionally, more money going into large, but it doesn't mean that money is not going into the other segments. That's, kind of where the money is heading.
Yeah, we've also seen a rapid influx of money heading into thematic and sectoral funds as well. Have you had any concerns about the amount of concentration, the amount of risk that might be building in this area?
Actually, if you look at it, I would not say it's so much of a risk, because if you look at various factors in terms of what's the earnings expectation, where the valuations stand, in pockets valuations could be expensive, but it's not, the entire segment's overvalued. As well as this continuous liquidity flow, which is providing at least the short-term stability. So I wouldn't talk about it being too risky at this point of time.
There have also been a few episodes of corporate governance problems at some mutual funds. Is this something your clients have been raising with you?
So yes, because there's a lot of noise being raised. Of course, there will be questions that come, but it also is comforting that you have a SEBI which is closely monitoring, each and every step of what the mutual fund is taking. So it actually gives a certain comfort to clients as well, that if there's anything going wrong, you have a watchdog who's tracking it very closely. And given the current issue, it's been around a week, and you've seen only 3 to 4% of the assets as an outflow. So that is actually easing the clients now that there's not too much of a quality issue with the underlying portfolios, and therefore, there may not be too much to worry about. Plus, the comfort of being in a regulated instrument, that is kind of now comforting the clients, I would say, more than concerning them.
I just want to get your views on some government policy as well, because of course we've seen an incredibly fast infrastructure build-out under Prime Minister Narendra Modi, but seen a few infrastructure failures as well. And over the weekend, of course, We had the partial roof collapse at the new part of New Delhi airport. We've seen similar scenes at 2 other airports around the countries and 4 bridges collapsing in Bihar. Do you have a few concerns about the speed and quality of the infrastructure build we've seen so far? And are there any risks around that?
So, given that it's such a huge economy and a lot of infrastructure which has been built up over the years, of course, it's but natural that there could be certain accidents. So, while that is a cause of concern, I would not say it impacts anywhere the trajectory at which we've been growing in terms of infrastructure and the quality. Because if you have negatives, if you have 2-3 negatives, I'd say you have another 7-8 positives as well. So I don't think it's a deterrent to, government's focus on infrastructure building. And that is what is needed also very much today for, the country to progress, to go to the next stage. So I think in terms of government's focus would continue towards infra, yes. These accidents would only mean that government's focus on the quality also goes up. But yeah, I don't think it will be a deterrent to the speed or the money being allocated towards infra.
Yeah, in terms of allocation, we'll get a few clues very soon because, of course, the budget is coming up. Do you expect the infrastructure allocation to remain the same or higher, or do you see money being spent in other areas as well?
So, definitely the focus towards, infrastructure, the capital expenditure that's gone under different segments of infrastructure would continue to be there. We don't see that, to be brought down. Also, what's happened is the government, I'm sure, realizes that social welfare policies is where they've kind of missed out. While they would have, they have done, they've taken certain steps, but there is a lot more missing in that segment to bring down the disparity between rural-urban growth, unemployment in that segment. So we do expect, some of those social welfare policies which could, benefit the rural, benefit agri, bring up employment would definitely get included. But that's also because government has, I would say, a buffer in terms of its revenue. Instead of 1 lakh crore, government has got 2 lakh crore of dividend from RBI. So without having an impact on the capex plan, they will have a buffer to also spend money on the social welfare activities or, those policies. So I think it's going to be a good blend of both these, not compromising on infra.